So, ladies and gentlemen, it's great to be in Paris, as always. And thank you for inviting me. Today, I would like to discuss the relationship between national currencies and stablecoins, and the role of regulation in that, the role of central banks, and the and CBDCs. But if we start this conversation about, thinking, okay, so what is really a national currency? I have a 10 euro here. It's issued by a central bank in the euro area. So this is central bank money. And if we would make this digital version, then we would call it central bank digital currency, CBDC, right? But the interesting thing is that most of the money in the world is not central bank money. Still, it's national. These are national currencies. So most of the money that is issued, for example, in the UK, is issued by commercial private banks. So it's private IOU. So we can say that, well, stablecoins are IOUs as well, right? Isn't that just then similar? Actually, then you could also ask, if we should trust a national currency which is mostly issued by a private company that we call bank, shouldn't we then also trust a private market player that is issuing a stable coin where it says, 1 euro or 10 euros and, there is money in the bank, trust me? That is a fair question, but I think, first of all, we have to understand that we do not really trust banks, do we? You see, there are 50,000 people working for the central banks in the Eurozone area. And most of them are, or large proportion of them, are monitoring and making sure that the banks are doing okay, they are following the rules and so on. So there is heavy regulation, there is extensive oversight, and then central banks, they provide special lending facilities in case something is going wrong. We have central banks that act as lenders of last resort. We have special deposit insurance schemes for consumer protection, and so on and so on. So bank deposits that are private IOUs, yes, they are, without the regulation, without the oversight, without the special lending facilities and other risk mitigating schemes in place, they would be defined simply as bad money, as coined by the Cornell professor Dan Avery, when he's making the case that, how to change bad money into good money. So IOUs, without the regulation, without the central banks, would be categorized as good money. So in some sense, we can say that it is due to regulation and it's due to society's safety net for banks, IOUs, that we refer to bank deposits as relatively safe or as good money. So, and then we also know that private commercial banks make the most of the money supply, but it is both regulation and central banks that make it a national currency. This is one way of describing a national currency, but of course it's much more complicated because a national currency is basically reflecting the monetary policy of a nation, which is then a separate thing. So a national currency is not just a piece of paper or not just a token that we issue and then we keep some reserves in the bank. It's not like that. Not a national currency. Because a national currency is always and everywhere a legal concept. What about then stablecoins? Well, stablecoins are really important, and for the first time in history, we can transact, manage, and store our own digital funds as tokens in non-custodial wallets, and we can then do this without the intermediation of financial institutions such as banks. And this is really, really important, and this is actually, in my mind, a game changer. And that is why I was so fascinated being a central banker going into this space in 2012. But if stablecoins are just a proxy for a national, if they're a proxy for a national currency, they are IOUs issued by private market players. They are in somewhat similar to the US dollar notes that were issued in the US by different banks before the establishment of the US Federal Reserve in 1913. Or just, put it bluntly, it would be defined by Dan Avery as bad money. So in my mind, stablecoins for national currencies, there can be stablecoins that have other purposes. Stablecoins for national currencies, they just need to evolve, and they need to become good money. And you can ask, okay, so why is that important? Why is it even important for a nation to have a national currency that is good money? It is because a trusted and widely used national currency can strengthen not only the geopolitical power of a nation, like we see with the US dollar, but it also facilitates economic prosperity. And that is why we have history full of examples of currency competition between nations. Now, I think that, and I thought this for a long time, that the future of national currencies is on-chain as tokens. And if that is true, then those currencies that will not be represented in adequate manner on a chain, they will simply suffer. And since regulation and central banks' support is needed to convert bad money into good money, it becomes a competitiveness for nations to make sure that you have the right tools in place to make that happen. I think, therefore, that we're likely to see fierce competition between nations on the regulatory and institutional front in supporting their own national currencies. It's basically in their own interest to do so. And we are seeing this happening. A few days ago, we saw the UK that passed new laws giving regulators the power to supervise crypto and stablecoins. And the declared aim of the law is, among other things, to facilitate the usage of blockchain in financial services. The UK opted to go out of the European market, Brexit, but in my mind, it's obvious that they want to compete in this market and compete with the EU. The most active investor in crypto and Web3, Andreessen Horowitz, did open his first non-US office outside of the US, that is in London a few weeks ago, and the cited reason is that they wanted to take advantage of what they see as a more welcoming environment for crypto and Web3 entrepreneurs. Now, the US is a different story. There is currently no specific regulatory framework for stablecoins, and as a result, the US dollar stablecoin holders are left in a legal no man's land. That's just a fact. But hopefully that will not last long in the US, and there are actually bills that are being discussed and proposed that could actually change this rapidly, since the drafts are discussing the optionality of stablecoin issuers to use the Fed's deposit accounts, and that would be really important to make those stablecoins safer from a counterparty risk point of view, and could give them competitive advantage. Now, Europe has already established regulation for digital money tokens known as e-money. And this piece of legislation was first introduced in the year 2000. So that makes it a well-established framework for over 20 years. Now, e-money, if you read the directive, then e-money is intended to be technically neutral form of cash. Doesn't matter what technology that you're using if you want to represent cash in a digital format. The European Central Bank, ECB, recognizes billions of euros of e-money issued by major financial institutions as overnight cash or overnight deposits. Now, Monerium, the company that I co-founded, became the first company in the world to be licensed and regulated to issue a national currency, the euro, on blockchain already in 2019. Just the euro, not the stablecoin, just the euro. But this demonstrates that the legal status of e-money under EU law has been clear for more than 2 decades. And aligned with e-money regulation, Monerium euro tokens are provided with the same consumer protection and are subject to the same KYC, KYB, and AML requirement as other euros. These are just euros on chain as tokens, as ERC20 tokens. Now, most of the Monerium euro tokens underlying funds are safeguarded in high-quality liquid assets. And they are held by State Street. They are managed and held by State Street. This is just in accordance with the regulation that requires us to do this in a certain way. And since Monerium euro tokens are recognized as a national currency, regular euros, we were able to fully integrate our token issuance solution with a single European payment system, SEPA. So our customers, they can manage their Monerium euro tokens with their Monerium provided IBANs in both TradFi and WebFi. You just get an IBAN account, money that goes into this account appears in your crypto wallet. You can do whatever you want in Web3. And then you won't need to pay your rent or whatever and send it to some bank account. Then you just do that from your wallet. No problem. So it's fully integrated. But from a global standpoint, then the US needs to step up its game, obviously. The UK is on a Web3 path, in my mind. Both US and UK legislators have discussed the possibility of granting stablecoin or e-money issuers direct access to central bank deposit facilities, and thereby removing the risk associated with keeping the underlying assets within a bank. So the competition between jurisdictions is on. Now, in Europe, we have what is called MiCA, or Markets in Crypto Assets. And MiCA does not provide access to central bank deposit facilities yet. I believe that one day that will become a reality. So I say yes, of course, regulation is important to convert bad money into good money. It's crucial, actually. It's not the whole story. And we need smart regulation. With regards to smart regulation, then the good news is that regulation can evolve and be improved. And we're seeing this already in Europe. So on June 28th, the EU Commission issued a review of PSD2 and suggested revised rules for PSD3. And one of the suggestions is to allow European central banks to provide account services to non-bank payment services providers, PSPs, at the discretion of the relevant central bank. Now, this is most interesting. This is most helpful. Although there are other aspects that I'm more, that I'm a little bit worried about. But anyway, I think this is basically telling us that, there is a competition between different jurisdictions, and we are seeing that the jurisdictions are responding because they understand quite well that the national currency as a token is important for any nation. So I say that regulation, just as technical and business innovation, is best served by competition. And if the EU, the US, the UK, or other jurisdictions, if they mishandle their regulation, companies can simply move their operation to more favorable jurisdictions. And this is, so that is why we have this competition, not only with regards to legal frameworks, also with regards to institutional support, access to central banks' facilities, and so on. Because competition is a catalyst for growth and progress, it is challenging the status quo, and it drives us to find better ways of doing things. And I think that, healthy competition is typically the most efficient way to provide people with the goods and services that they desire. So I think that policymakers, central bankers, and others that are affecting the framework and the support, they should embrace competition. I think that central banks should remove themselves from competition. And I say that as a former central banker myself. And in doing so, it will be more likely to encourage more investments in businesses and technical innovation in payments, and thus facilitate competition that is likely to lead to a better solution for their own national currencies. I think, quite honestly, that central banks should not be allowed to position themselves as direct competitors in the retail payment space. It is not the role of central banks to drive business and technical innovation in retail payments. And also, if a central bank were to compete, it would create a conflict of interest when it comes to regulating and monitoring its competitors. It doesn't work. So, in conclusion, I think that we are on the verge of a new era of a fierce currency competition. This will be a competition between national currencies and between other forms of money tokens, including stablecoins. A competitive and widely used national currency gives power to nations. The winners in such a competition are the ones that will be backed by central banks, and they will encourage competition on all fronts. And merely discussing the idea of central banks offering retail CBDC does hamper investments. Because who's going to compete with a central bank that can create all the money it needs to compete? So it is not good for competition, and it's therefore not good for growth and prosperity of nations. The European Central Bank, ECB, has been very vocal about its digital euro project. In my mind, it is not helpful for the euro, and therefore not helpful for the people of Europe. Important. Absolutely. If I just complete, so rather than deterring private investments, I think they should encourage private companies to compete. A digital euro already exists. It was first issued by Monerium in 2019, fully legal, fully regulated, licensed and everything. You can go to the Monerium website and just onboard, and you get an IBAN account in 5 minutes or something like that. So, to strengthen the euro that can better compete on the global stage, I think it's important for Europeans. The ECB should back the digital euro by granting e-money issuers in general access to the bank deposits facility, as is now the case for commercial banks. And I think also that equal backing by the European Central Bank would create a level playing field and therefore facilitate what we need for Europe, that is growth. Thank you.
Thank you, Jan. We have time for a couple questions.
Yeah, hi, John. Thank you for the presentation. Could you talk about how MiCA is impacting Monerium?
So MiCA basically states that anyone that wants to issue a national currency will have to be licensed as an e-money institution or a credit institution. So we are already an e-money institution, so that is not a problem. But then MiCA is adding some other requirements, like new issuers, they need to issue white papers. Okay, we are not a new issuer, so that's not an issue. But what MiCA does, which I really don't like, is that they require e-money issuers to hold at least 30% of the underlying assets in banks, commercial private banks. And the whole idea of tokenizing money in this way is try to make it safer. And we can't do that by having it safeguarded either as high-quality liquid assets managed by a world-renowned asset manager company like State Street, like we do, or keep it directly with the central banks. But to require e-money issuers to hold at least 30% of the money in a commercial bank, I don't see how that is helpful in any way. I don't think so. And then there is another issue which is not helpful, which is that under MiCA, then there are limitations on the volumes that you're allowed to issue in other currencies than European currencies. And as long as you issue it in the correct way, you safeguard it in the correct way, why would you do this? And then they complicate things further and say, well, there's a difference between those that are issuing smaller amounts and bigger amounts, then you're a significant issuer, and then you have to have this rule and this rule. I mean, this is, can I be blunt? I think it's BS. It's unnecessary. For stablecoins, it's not necessary. But it is there, and the stated objective of MiCA to create regulatory clarity for crypto, yes, I think that is correct. To create regulatory clarity for e-money tokens, wrong, because we have had this legislation for 20 years. And has anyone complained? No. But anyway, this is the case. This is where we are. So so what we need to do now is to just improve what we have. And there's this new proposal or this new revision of PSD2 into PSD3 is a positive step. So we have to just work with these guys and say, okay, the aim here is to make Europe stronger, make sure that the euro is going to be used on this platform. How can we do that in the best way? It's not about the interest of the banks. It's about creating what I think is inevitable, which is the euro as a token on blockchains. Did I answer the question? Sorry. Okay.
Any other questions?
Yeah, just one other question. You mentioned the competition between the different euro jurisdictions. Which in your opinion is the most favorable towards your digital currencies and maybe e-money?
Yeah, no, this is a really good question. So when we started Monerium many years ago, we thought, most real-world assets will be tokenized at one stage in the future. But in order to trade them for something, you will use the fiat system, okay? National currencies, they are regulated, will be regulated. So what regulatory framework should we build our company on to basically offer real money on chain? And I mean, I was born in Iceland and live in the UK, but living in an island in the middle of the Atlantic, looking at the US and looking at the Europe, we say, okay, so how is it in Europe, and how is it in Europe, and how is it in Asia? At that time, we said, okay, so there is a fantastic regulation in Europe. It's called e-money. So it's technically neutral. It has to do with consumer protection, how you safeguard the funds, and all of that. So we go for that. That was the best, and actually, it is still the best. We are under the e-money framework. I don't think MiCA is improving e-money, but it just states the fact that we have to work more closely with regulators to make sure that this is going to be smooth and we will be ahead. Now, the competition between nations, the UK is developing interesting piece of legislation. And the Bank of England, we actually started the project with Monerium the first discussions we had in 2015 was with Bank of England discussing putting the sterling on blockchain. And my sense is that the UK could surprise us. And that is why we have decided, Monerium has decided, to open an office in London, because I think that unless things will change rather rapidly in Europe, they will probably have to move faster because they are competing with the rest of Europe. Hopefully, EU policymakers will move fast, so we don't need to. But in any case, we are opening up this autumn an office in London. So we'll see.
Thank you, Jon. Let's give him a round of applause. Next up, we have Akli moderating a panel on navigating the international regulatory landscape.